See, and even Zoom will tell you that the meeting is being recorded. So once again, as always, I like to say, or that my background is in microbiology. I do have an MBA in healthcare administration. So I am not a financial advisor. Majority of everything that I say is more for entertainment. But I do hope that the entertainment value that I give you will provide you some type of knowledge and education so that you can be able to use it in your own investment strategy, right? And a lot of the strategy that we end up talking about here is not like it's unknown information. This is all information that's readily available on the internet somewhere, um, either in an investment book that was written by someone who was an expert, or just through the history channels that you get all this information from. But however you stumbled to this information, I'm just grateful that you're here, and we can start with some of these objectives. So we're going to review last week trades, some of the things that happen in the biotech and in the technology sector as a whole. We'll do an earnings preview, and then also look at some stocks that are worthy of during this reopening, particularly like REITs, which is Real Estate Investment Trust. One of those companies, Simon Property Group, they've been having a lot of people buying, insider buying, I should say. So as the stocks, or as the market starts to open up, as the economy starts to really reopen up, I would not be surprised if these in real estate companies that are connected to malls or restaurants that provide some type of general revenue will start to increase in value. Um, Typically, as always, I like to think of the book Think and Grow Rich. When we think about persistence and want to maintain that consistency, we want to maintain that dedication. The only way that we can do that is really defining our purpose, which is, this is something that's straight out of the book. Um, it said that people that are willing to become wealthy, these are some of the characteristics or traits that they do to train themselves to become persistent. And that persistent is having that definite purpose. So that's why we are here on Sundays. We desire to become millionaires, or at least wealthy, that way that we can provide for our family with no issues. Self-reliance, that everything in the stock market will really show you how to be self-reliant. And I hope that, today will put you in that trajectory so that self-reliance is there. We plan everything else, but a lot of times we don't plan our financial outcome. This is something that will definitely help us as we create plans on the different stocks that we're looking at, and then having that accurate knowledge. And you'll see a list, kind of an order of operations of having the knowledge that you will need so that you can continue becoming profitable as a trader. And cooperation, right? When you're in a group, you cooperate with each other so that we can find a higher purpose, or at least a higher attainment for that goal. Because once we bounce ideas off of each other, it's easier to move accordingly. Then willpower, right? That willpower really comes from within. That might go hand in hand with self-reliance. When you have that willpower from within, then it's harder for anything to disrupt that. And then habit. This becomes habit every time. Every time this becomes habit, every time you get better, every time you figure out what needs to be done, and the better that you make these things a habit, the the less stress that you have to create for yourself, because these are habitual things that will help you to become persistent and then become, wealthy, or at least, close to a millionaire. You know, and I tend to think of looking at the stock market on a ODA loop, where when we start looking at the charts, you look at what you're observing, and what you're observing is some of the information that is just coming in, right? This is new information. Everything that I'm sharing right now is relatively new to you, Grace, right? I know Angie has an idea and she's moving on a strong trajectory right now. So, when we're looking at everything in totality, we're getting all the information. We're just observing where we are, and then we have to orient ourselves on where we are in the premise of all that information that just happened. Whether it's the old information meeting the new information, we have to orient ourselves with that. And then we have to decide on, based on that information that we were just given, you have to decide by creating some type of hypothesis on what we think a company can do, right? And then once we have that, then we can start acting on it. We can start thinking of, okay, well, um, if this stock goes, you know, down 2%, it can possibly go down lower. So let me cut my losses now and then wait for it to finish going low. And then I'll buy when it starts to create a new support area, and then that's how you really start testing your hypothesis. You really start testing what your ideas were about a particular stock. And then the same thing on the upside. Maybe the stock can go up 2%. And if it does go up 2%, maybe it can go up another 5% the next day, because you're not going to get 100% of your trades right. But the way that you manage your funds, that you're funding your account, to manage your funds and create low risk decisions will give you a feedback less of losing less. Right? You can always lose more, but you want to lose less. I don't know why this is here. All right. I don't know if y'all can see this yellow line. I still don't know how this yellow line got here. Um, but either way, this is my scan. When I scan for stocks, usually I'll have about 5 or 6 stocks that will go like $3 a share on the day, $1 to $2 a share. This one went $4. This is LEDS. Um, ONVO went almost $2 a share. So you'll see stocks that will move at least $2 to $3 a share. And the idea is to be able to capture at least $1 out of that movement. Once you catch $1 out of that movement, it's easier to find yourself in a profitable scene or a profitable scenario, because if you find a stock that's only moving 15 cents, yeah, it might move 15 cents, but you might have to buy a whole lot more shares to really capture a higher percentage, right? So, which is fine. There's nothing wrong with a 15-cent move, but just know how many shares that you would want to buy before actually getting into it. So when we're doing any type of scan looking for shares or a float size of a company, that's usually around 2 million to 8 million. And we'll go through what the float size mean. The float is really just the collection of shares that a company has available to trade in the public market. So if a company has 2 million shares versus 80 million shares, then that's great, because that stock can really run up $3, $4 a share, when you do the scan. And like I say, you just want to capture at least $1 worth of that upside. Um, the volume, anything that's trading above 500,000. If you have a stock that's trading more than 500,000, that's usually means that it's in play on the day, because people have created a general interest in it. And then as you see, sometimes you'll get stocks that'll go up to 200 million, like VTNR, that went up 232 million on Friday. And then you want a percentage change of about 5%, and looking for stocks that are trading around 15 cents to $100. That just kind of puts everything in a range. That way you can really consolidate the information. And welcome, Leon. I know that you know this stuff, but I'm trying to bring Grace, who's new here, to up to speed so that we're all so we at least have some idea and we can create more of a dialogue later. Um, this is an order of operations, right? Based off of what we just said in the scan, the order of operations usually goes just like this, where you'll look at stocks when the stock market opens. The stock market opens at really at 4 a.m. right? And at 4 a.m., that's pre-market time. So from 4 a.m. to about 9:30 a.m., that's all pre-market. Institutional investors and then retail investors all come together around that time frame. From 9:30 into about 4 p.m., that the market is completely open. And it's open to everybody, doesn't matter who. And then at 4 p.m., you have it where the market is closed again. And that's another round of where institutional investors can manipulate or dictate where a stock price should go, right? And that's where you'll, during the pre market or after hours time, is the time where you'll normally find out what a stock is doing and based upon its earnings. So those closed market times is the time really to do research on a stock, right? That's the time when you try to figure out, well, what news, what is the catalyst of that stock. You have the time of day, whether the time of day is is essential. And I don't want to go too deeply into this. There's a book that I will share later on so that you can be able to really break down each time frame of the market of the open market day, so that you can get a better assessment of what the time of day is. The time frame when we're on the stock chart, we're looking at the time frame, and I know I didn't write in one, which is the 4 hour time frame, just because this is a little bit old. But usually when we check in the time, we're checking the daily, we're checking the 4 hour, the hourly, and the minute, right? These four time frames, and I should probably just edit now. These these four time frames gives us a chance to really understand what the stock is doing, and the direction it could go. You know, those four time frames are probably the best time frames ever. The news, the sentiment, the catalyst, that's something you should check in on. You probably should do that probably after the 5% move on the day. You say, well, okay, what's really causing this stock to move? And then there's candlestick patterns. These patterns have breakout chart patterns. You have breakdown chart patterns. You have bullish engulfing patterns. You have triangle patterns. You have wedges. There's so many different patterns. Um, there's a book on Chinese candlesticks by Steve Neeson, that is really really good to give you an understanding of what the candlestick patterns really mean and how they can really help you identify if a stock is going up or going down. Then there's the volume, the float size, which we just talked about. Strong volume, low float causes a stock to really rise up. Low volume tends to cause a stock to go down. You need volume to really start moving a stock. Um, Support and resistance lines, where the support line, that's typically where your demand is. Where the resistance line is, that's typically where your supply is. And then you have moving averages. These moving averages are averages of price, using a calculations of a price according to the day. So you can have a moving average price of 5. So that is the average price, or exponential moving average price of of that price for the past 5 days. You can have the same thing for the 20 and the 200 SMA, which is the same price over the past 20 days, what that price is, right? What the simple moving average of that price over the past 20 days and the simple moving average price of that stock for the past 200 days. This will make sense when we look at it at the chart. And then the other technicals are just the MACD, which measures momentum, RSI, Grace, as we explained, as we talked about this yesterday, deals with overbought and oversold. TTM Squeeze is a nice indicator to use as well, because it gives you an idea of what the sentiment well, sentiment and momentum of a stock is going, based on the time frames that we talked about, with the daily, the 4 hour, hourly, and the minute. And then if you're trading options, which most people who are now just getting into the stock market and finding out that options can really hedge yourself on a higher accord, they're not realizing that they're not using the implied volatility and the theoretical price, which is just as important to understand if you're using options. And then plan, and based on all this information that you just consumed, have a plan. What's your entry plan? What's your exit plan? So that is the order of operations. This is the Wycoff event phase. All right, you will see stocks do just like this. They'll go up, consolidate, and then go down. Go up, consolidate, then go down. After they come down, they will come down, consolidate, go back up. Really that simple. Sometimes we complicate it because we have all of this to digest. We're trying to figure out, okay, where are we in reference to this Wyckoff phase? But once you start to realize that when a stock is on its downside, then that's when you should start looking to, whether or not you should buy it. Like Peloton. Peloton was down because of some news, because of some parent was not watching their child, and then the unfortunate event of their child getting, um, you know, experiencing death because of, you know, they would say it's a malfunction of the actual device, but if the parent was watching their child, it's like saying, "Hey, I drank hot coffee at McDonald's. I'm going to sue McDonald's." No, you should have waited for it to cool down. So it's kind of the same thing. So, you know, except for the baby died, which is the unfortunate part. But because the equipment is really good and it gives you manufacturer designs on how to actually, you know, be prepared and to prevent any type of accident, you will look for the stock to come down because of bad news. Like, okay, the news is bad. Just wait for it to balance out. Once it finds support, you will see that this becomes phase one, right? Because it was been coming down right here. And then once it's down and is just consolidating, this is all phase one, and then it will go back up to phase two. Phase two is the increase phase where it starts to go up exponentially. And then we'll have phase three, which it just consolidates, and then phase four when it comes down. And then this will be shown to you once again once we get to the chart, which we're about to get to. Um, so earnings, earnings is coming up. We have, obviously Monday is closed, but a company is still. I think this is a Chinese company. They're still coming out with something when after 4 p.m. They're coming out with some type of news. But during the week, we have Scotiabank, we have Zoom. One is pre-market, one is after hours. We have trying to think what else is another company that people might know. Digital Turbine sounds familiar, but I'm not 100% sure about that. Oh, Hewlett Packard. Hewlett Packard Computers. They also released their earnings on Tuesday after hours. Earnings is just a financial term to let you know, or their fundamentals, meaning that what they've been able to do financially. Are they gaining money? Or are they losing money? Are they increasing our earnings price per share, or are they decreasing our earnings price per share? The earnings tells you what to buy. The technicals that we just went over tells you where to buy. Like all of this just tells you where to buy. It doesn't tell you anything else. It just says this is where you need to buy. Once you figure out where you can buy, once you figure out where you can buy, then you on the stock that says, hey, we have positive earnings, then it's easier to say, hey, I would buy Zoom because everyone is using Zoom. Post pandemic, people are still going to be planning on using Zoom. There might be travel still, but to reduce costs for businesses, they still might do international calls via Zoom and only travel domestically, right? And I don't know if that's going to be true, but that's just something. C3 AI, that's an AI company, obviously. Intelligence, really futuristic information, really futuristic programming, using computers, using robots, using anything that might replace the human existence. They're coming out with earnings on Wednesday. Advanced Auto Parts, they're coming out with earnings on Wednesday. So this is before, this is after. Cloudera, everyone's looking for a way to store data in the cloud. Um, Cloudera is going to come out with their earnings, and I believe there was a company that came out on Friday, CrowdStrike. I think they're also in the cloud services, right? And they didn't do too well, even though that they were given an upgrade after. So they released earnings saying that they lost money, but everyone, all the analysts, said that this is still a company to invest in, right? So even though the price might drop, you'll still have analysts who are very interested into the company itself. Um, Express, this was one of my favorites during the past week. As everyone got into AMC, and I saw that I missed my entry price at the $14 area, which is what I really wanted to get in at. I just said, okay, there's other companies that are kind of running with the Reddit crowd, and Express was one of them. We'll go over that in a little bit. And DocuSign is coming out with earnings on Thursday after hours. If you've signed any type of document during the pandemic, it was probably through this company. So I would not be surprised if they didn't do too well. Cons, that is a food service company. Um, it's a low flow company as well. So if they do well on earnings, I would expect them to only go up higher. I've been watching them for a while. That's the only reason why I have my eyes really on them. And then Five Below, right? Five Below. And I know people like Slack because it just integrates computers together. But Five Below, just like you will have these big brand target names like Dollar General, stuff like that you'll go to the department store and get really discounted prices on things. You know, this is Five Below. They do the same thing. So I wouldn't be surprised if the market gives them a boost. So I know, Broadcom, Lululemon, Duluth Trading, like there's so many different stocks to choose from. But I always say, just focus on one or two each day. Come up with a thesis. They use that ODA application, and then try to figure out what you want to do with it from there. Um, so I know that was a whole lot, especially in a span of 25 minutes. I threw a whole bunch of information uh, at Grace. So I know I suggested to Grace that if she had any questions, that she should bring it up today, right? And so if you have any questions, definitely please feel free to interject at any given time, especially as we go over a lot of these stocks as they are. Um, so does anyone have any questions or anything that they want to look at, particularly right now? I know I mentioned Simon Property Group, and Simon Property Group, like I said before, it deals with the malls. It deals with all these malls where you buy your favorite clothes from, whether it's Guess, Abercrombie and Fitch. Um, they own, well, they are like the landlord to these companies, right? So as a landlord, you're ready to collect every month to, so you get your you get your investment on your property, right? So ever since the pandemic, and let's zoom this stock out a little bit deeper, so you can see it's all time. So if we remember the whole Wycoff method, right? You see how the stock just kind of plummeted down and went back up, right? So it went from a high of $229, and then Right now it's at $218. So in order to orient ourselves, we start to look at, well, what are we actually looking at here? Um, so we identify as all-time high, but this red line here is the 200 SMA price, right? And just again, just to really put the clear out, um, this 200 SMA price, it it gives us a chance to understand where we are in relation to it, to the stock being bullish, meaning the stock going up, or bearish, meaning the stock going down. So over the past 200 days, the average price of Simon Property Group is $92. That is roughly um, 36 dollars above where it's trading right now. So we can say that this is relatively bullish because it, ever since it came down after the pandemic, it's been trading below the 200 SMA price, which means it was bearish. But since it crossed, which was right here, since the stock price, the actual candlesticks themselves, crossed above the 200 SMA price, it's been in bullish sentiment ever since, right? This is what we want to look for. We want to look for stocks that are trading, the candlesticks are actually trading close to the 200 SMA price, so that when you have an opportunity for the moving averages, which is this green line and this teal line, which I'm about to explain in a second, when you start seeing that these two lines are crossing above the 200 SMA price, then you'll know that, okay, this stock has more upside. Particularly, this stock had more upside after releasing earnings back in November. And this is what created more of a catalyst for that upside. The earnings says that that the market estimated $2.25 per share, but they only got $2.05 a share when they reported their earnings. They reported less than what it was expected by analysts, but it still did positively well. Why is that? I don't know. But what I do know is that, when you'll follow the trend, if the trend is showing that the moving averages, which is this 5 exponential moving average and the 20 simple moving average, cross over the 200 moving average, then the price should go up higher. So why the 5 EMA and the 20 SMA? The 5 EMA just gives you an idea of what the price is exponentially over the past 5 days. So if we go to current time says that the 5 EMA is at $126.70. We use the 5 EMA price to let us know that if the stock is trading above this 5 EMA, it's going to go higher, right? And you can look at it every time. Anytime when the stock is trading above the 5 EMA, it always goes higher. The minute the stock starts trading below the 5 EMA, it goes lower. Now, how low and how high is determined based on the support and resistance lines, right? So that's what we use. We use the 5 EMA to be able to dictate, or at least understand, predict its movement. The 20 SMA price is the price moving average over the past 20 days. But at the same time, I know I mentioned the support or resistance lines, right? So if you have the 20 SMA price and you see that the 20 SMA price in relation to the 5 EMA price has some distance between the two, maybe you start thinking, well, if I were to buy this stock above the 5 EMA, my downside risk would be the 5 EMA price, which is 126.70, or the 20 SMA price, which is $123.25. Once you start identifying what your possible downside risk is, then you can get an analysis of where your possible upside risk is or reward is, right? So when we use the 5 EMA and the 20 SMA, that is what is particularly there for. Because once the stock is trading above the 5 EMA price, it says it can go higher. That's a good thing. But the minute it starts trading below the 5 EMA price, the price can test the 20 SMA price like it did right here. Back here, it was up and it was up here, but then very next day, what did they do? They came out with earnings. The earnings was in line. Why did the price come down with the estimate and the actual earnings being in line? I don't know. I can't answer that. But what I can say is that once it came down, it tested the 20 SMA price and did that the next day, right? It was a stronger red candlestick, but it was also holding support right around here too, right? And you'll see once you start reading candlestick books that when you have these blunted candlesticks that are full body like this, oftentimes they don't go higher or lower. You know, you need that wick. You need that wick at times, and we'll go over that as well. There's so much to go over, but but essentially, you know, when you have a stock that comes back to the 20 SMA price, it tests that to see if it needs to test the 200 SMA price. So hopefully that makes sense. If it's trading above the 5 EMA price, it's going to go higher. If it trades below the 5 EMA price, it's going to go lower and test the 20 SMA price. If it goes below the 20 SMA price, it can test support first, right? Sometimes there's support lines there. And if it breaks that support line, then it can possibly travel lower to the 200 SMA price. So here with Simon Properties, we see that not only is it trading above the 5 EMA price, it's trading above the 20 SMA price, and it's trading above the 200 SMA price. But we also have the MACD. This is the momentum indicator. This momentum indicator shows that there's a break that helps. Well, there's a cross actually. That this cross shows that, hey, you know, there's bullish sentiment. Green, green, green. These green histograms right here. There's a cross here. That usually shows bullish sentiment. If you have a cross and it comes down towards this zero line, so there was a cross here. This cross here shows that the momentum was drifting down. Even though the price was between a range, the momentum was drifting down, right? So we would have to wait for the momentum to find some type of balance first, which it did. It was finding balance here along the stock price and along the moving averages before it actually crossed, changed momentum from red to green, changed momentum here, and then it continued. Yeah, it crossed one more time, but after it crossed again, right? So this is one where, you know, Simon Property Group, it has a higher float size, but it's one of those stocks that once it finds some type of momentum going on the upside, particularly it's a reopening stock, it will go higher. And this is what it's doing, it's going higher on the stock. And maybe it has to retest this 128 price and really break it convincingly for it to go higher. But if it does so, best believe that investors will be happy about this just because of the fact that one, everything is reopening. Two, over the weekend, people are going to be doing a whole lot of buying. And then three, last week was a lot of retailers that came out with earnings, and everyone beated their earnings except for like one. And I think that was Nordstrom's. Nordstrom's. I don't even know if anyone shops at Nordstrom's anymore, but that was that one. And then you also have the TTM squeeze. This TTM squeeze right here. When you have all these red dots right here, the red dots allow you to see if or tell you that if it's bullish or bearish. The red dots mean that it's bearish, that there's still some selling going on, right? The green dots means that it's bullish, that there's a lot of buying going on. But when you have the histograms above the zero line, which it is right here, the opportunity for the stock to turn green, or the turn, well, for the zero line to turn green, is coming. It's just that it's squeezing. It's considered a squeeze, where they're squeezing out all the sellers on this zero line so that the zero line now becomes green, like it did back here, right? And we have to use the past. We have to use the past. What is it? It's the, not experience, but the past movement of the stock, right? If you have the past movement of the stock and you understand, or you see that, hey, some things are being repeated. Like it was red all here, consolidated, 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 and then it finally started to trade above the zero line. Then you could start tracing with the TTM squeeze that, hey, this stock has still has some upside. And yeah, it might change color. Like it will go from this strong teal color to this dark blue color, which the teal means strong buy, and then the darker blue means weak buy. So yeah, it's a weaker buy, so it's just coming down until it goes below the zero line, which that's when selling starts to begin. And then you'll have the red, the red histogram showing strong selling because of the zero line is red. The histograms are red. But once it starts turning yellow, you will have that it shows weak selling. And then the selling starts to get a little bit smaller as the histograms get a little bit smaller and cross back over the zero line. So that's kind of what's happening over here, except, or in present day, except that the histogram did not go below the zero line. It stayed above the zero line through all of its, downside weakness. It still has some strength to stay above. So this is one that I would say, I put out a message about um, REITs, real estate investment trust, and this is one that I believe that will continue to do really well, just because it's dealing with commercial space of companies like Guess, uh, not Nordstrom's, but Guess, Aeropostale, um, Koss, and of those bigger names that they're going to generate money uh, for their I don't know why I can't think right now. They're trying to generate money for their landlord essentially, and Simon Property Group is the landlord. So a list of other, if you want a list of other REITs, you can come to finviz.com. And on finviz.com, we have this list of other realtors. Um, I was looking at Kimco Realty because they deal with a lot of groceries. So if you're dealing in the grocery space like Trader Joe's and stuff like that, KIM is one that's in that space. If you come to this page called finviz.com, you can be able to find all the stocks within your industry, and these are all the REITs and retail in the industry. The sector is real estate. The industry is REIT retail, and I organize this based upon the change price that they did on Friday. So on Friday, Washington Prime Group did 12%. Everyone else was kind of like 1%, right? And this is not something that you would expect to earn 5% every day on, but do anticipate earning 2%, 3%, 1% if you're in the position. And then on the downside, maybe 1%, 2%. But, commonplace is it for you to be able to really earn, it's about 1%, maybe 2% on the day. It's a slow mover. It's a slow and steady. Sometimes slow and steady is really good. Right. So that's why I highlighted that one. Um, but outside of Simon Property Group, uh, are there any other stocks that people are have been watching or have on their watch list that they found interesting during the week, or things that they were like, oh, okay, I am not 100% sure of why I even traded this, but I traded it, and it's, I'm not 100% sure what I should do. I'm trying to open it up for everybody so we all have something to say.
Well, if you're, hello,
Hey Fitz, how you doing?
I'm good. I'm good. Hello, everybody. Yes, I was in this one that BX for a few weeks, about 2 weeks, past 2 weeks.
You said BX?
Yeah,
Blackstone.
Blackstone. Yeah, and it did very well, but I came out a little bit too quick. It break it all-time high.
Yep. And it looks like it still wants to go a little bit higher too.
Yeah, yeah, it's moving. It's doing did very well.
So what gave you interest into this stock?
You
Obviously,
know,
Blackstone.
as you know that I am a little different from you. I'm a I'm a fund, what do you call it now? I have a squeeze. I use a squeeze, and based on what it showed me, that where oh, that's how I went in. I should show me that all the moving averages were lining up, so I just enter in,
Oh,
and
you
that was
mean you
and that
use the
was
black box? You mean black box?
no, 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 no,
Black
no,
box or black box?
no, the TTM squeeze.
My TTM squeeze is the same as yours.
Yeah, but I have one for the watch list. That's a little different. That's a coded one.
Oh yeah, that's right. That's right. That's right. Okay, okay, okay. Yeah, but
That, that's
yeah,
a coded one. So
coded.
yeah, whenever it's all of them is lined up. It's like it's on 15 minutes, 30 minutes, 1 hour, and the weekly when all of them is giving me like the teal color together.
Mm-hmm.
That was what I saw on pre-market. So I jumped in right as the market started, and it did well.
So this is one of those stocks that, like I say, it will go like 2%, 3%, 2%, 1% on
Yeah,
the
but
day, and it's
keep
just a
going up.
slow grinder,
Yeah,
right?
it went up. It went up. Maybe yeah, it did very well since I got it.
Mm-hmm.
Well, you
So,
know which one was good last week? FUTU, FUTU.
oh yeah, I forgot about that one.
Yeah,
Yes.
that's one is good.
So this one, I forgot what it does. I think I want to say this is in biotech. I can't remember the background of it. Um,
FUTU.
yeah. So this is one that it has. It was trading so low. I remember before I was in it around here, waiting for it to really make the break, and my impatience really got to me. But once it finally broke out to all-time highs at $204 a share, once any stock makes a high, it's going to pull back. Like I see Blackstone doing it. I see Blackstone doing the same thing. It made a new high, but it's not extremely overbought yet. BXT is not it's not extremely overbought like how it was before when it was overbought. So this could go higher. But FUTU, because it made a new high, it pulled back, right? And it tried it twice, right? Like what we said at the beginning, if it's trading above the 5 EMA price, it tends to go higher until it's not trading above the 5 EMA price, and it will test the 20 SMA, and then it will come down trying to test the 200 SMA price, which is right here, which it didn't, right? It actually was testing support. The support price was back here, um, back in this February 8th. It retested that February 8th price on March 8th. And then it bounced up, trying to retest the resistance price over here back on March 2nd, well, probably March third, but essentially it was trying to retest the resistance. Since it couldn't retest and break that resistance, just came back down to retest once again this price that was formed on February 8th and March 8th. You see that blunted candle here on March 22nd, it came to it and broke down below it. Just because, you know, when we have this type of breakdown and we see that all the MACD is starting to move down, starting to decrease, this is the type of movement that we would get. We would get that it was coming down even further before it found some upside. But we see that it's in this consolidation phase, right? Or where it's between $100 a share. And actually, let me draw some lines or move my lines so we can.
But you know, Jermaine, the options were very expensive for the stock. I was watching it. The options were expensive, and the spreads were pretty large, if I remember correctly.
Okay.
Yeah.
Right, Mr. Fitz.
They are.
Okay. So this is what I learned. Remember I spoke to you guys about the spread.
Mm-hmm.
So let us say we can differentiate with the stocks that we trade. Airbnb, Bowen, FUTU. That's the one we're talking about now.
Yes.
GameStop, you can buy them $20 out of the money.
Uh-huh.
In the money, it might be $2,000 for the option, but out of the money, you might find it for $2. Because when the reason for that is that when these stocks go up, they go up like $20, just like Nvidia.
Mm-hmm.
So if you have an option that is way out there, by the time the delta roll over, it is like it becomes 10 times. That is why they make so much money of these stocks. Because I bought a 50-cent option about $15 or $20 out of the money. And FUTU this stock went up $13, and it caused that option to almost become $600.
Mm-hmm.
So these stocks that move a lot, you don't have to buy them at the money. You can buy these out of the money.
Thank you for that. Understood.
And as the delta roll over, because for instance, go, you're on the option page right here.
Yep.
Yeah. Okay. So just look at the money where the money is now. Okay. At the money, what the price at the money?
It's like $9.30 to $10.
Oh,
$9.30 to $10.
Okay. Go out about 20. Go further out and see what it come down to. Like about it's trading at one. Let me.
They're trading at 142.27.
140. So look at the 160 option.
Yep.
What's the price for that?
It's $295 and $330.
Okay. So when you're buying this stock, you buy that option. And just give it some time, because just like Nvidia, this one, Bowen, those stocks that move like GameStop that move like $20. You have to just make up your mind that you're gonna risk that. And then that's what I discovered. Airbnb, those stocks that move a whole lot. So as the delta roll over, what's the delta for the one that the one at the money? What's the delta for that one?
This one's 56.
Okay, what the delta for the 60?
For the 160 is 25.
Okay, so it's the delta is gonna roll over, but you're gonna more than triple your money when it roll over. When it these are the things that we have to learn about options, because it roll over so fast. That is what blow up your option and make your option gain so much. Because by the time the stock reach your option, it is going to be, it's going to triple that delta or more.
Mm-hmm.
You guys understand? You understand what I'm saying now? So instead of your delta being 25, you're going to make it 75.
Right. That's
So that
when
is,
it gets in the money. I think
yeah.
Leon,
Yeah.
Leon, did you understand that? Because I know we were talking about not
Yes,
buying
yes,
too
yes,
far out of
absolutely.
the money.
Thank you.
Right? Right?
It's just that I didn't, I didn't, you know, because you guys always, you know, stress to buy in the money
Yes, but this
because,
is what I discover.
yes, I understand.
Yeah, this is
This
what I
makes sense now.
Yeah, this is what I discovered, that based on the stocks that we trade in option, we have to observe and see what movements, how much they move. Some stock only move like $3, some may move $5. So those you have to buy them in the money are one strike out of the money. You don't want to buy them more than the less than the faulty delta. But the
Right.
stocks that move 20, that can move $10 or $20 per day, you can buy them. You can buy the 25 delta.
Yeah, you can end up buying a delta that's a lot lower
Lot
than
lower.
typical. Because
So,
typically we're like, okay, don't want anything below 30.
right.
And then, you know, then you're looking at the price, you're like, oh wow, that's kind of high. And then when you look at the volume, you said, well, there's not even a lot of volume behind it either. Right. So you're just like, oh, okay. But with FUTU,
Yeah.
there's some type of, you know, interest. There's some type of volume, right? Even at the $20 strike price, we have almost 400 in volume with
Right.
1,000 in open interest. So like a 50 cent, buying a 50-cent call there doesn't
Yeah.
seem too unreasonable on the
Yeah.
June 18th expiration, right?
Right.
I don't do
So that,
weeklies because I feel like they're a little bit too risky.
but
But
I did it, and it jumped up about almost $600 for the 50 cents.
you did the weekly,
Wow.
you did the weekly, Fitz.
Yeah, I did it.
Okay. So
I did
like,
like the Friday, and I don't know if it's a Monday. I don't remember if it's a Monday jump up. I did it the Friday, and the Monday one when I wake up, it was already $500 up.
nice. See, and
Sorry,
that,
sorry for the 500. It's $5, as I said.
no, I know you
I'm
do
sorry.
the, yeah, you do it by the 100. Yeah,
Yeah,
like you
I think about
by
the
a dollar.
100. Sorry, I'm sorry.
But you see, that's where the difference between the weekly and the regular
Yeah.
option is that now you have to like look at, okay, am I holding it for the day? Because if you're holding it for the day, then maybe a weekly might be a cheaper option. Maybe, all right, maybe
Yeah.
you might be able to get a price at the 50 cent range, and doesn't have to go to $200. As a strike price, it can go to 170
Yeah.
or 170 or 172 and 50 cents, right?
Yeah. Half 1 hour after the market opened, it was $13.
Oh,
So the option,
when the market open was up $13.
as soon as the market opened, it jumped up from before market open, it was $5. It was over $5.
Mm,
And as soon as the market opened, it jumped up to about $13. So
mm.
within that short period of time, if you had bought that option, it would be almost $600 or more just for the 50 cents. I mean $6.
And
Not $6, 600. Because now it become 100.
right. See, and this FUTU is a financial stock. I said biotech. I think my
Yeah.
mind's just stuck on biotech right now. But when it comes to financial, especially a stock that's out of China, this is out of Hong Kong. You start to realize that everybody in the financial sector is trying to find an easier way for people to manage their money online specifically. So you have this one. Of course, you have Square, you have PayPal, and then you also have Acorn, that's coming out via SPAC. So that should be coming out probably like later or so. But the SPAC is trading right now. But this is probably another reason why FUTU went up, is because like all the banks did well, even though that they were in congressional hearings this past week, being cussed out by Senator Warren, um, and it just causes other banks from other countries to find some upside, um, or at least some positive sentiment. And I think they did well on their earnings, did they not? I know
Yeah.
they got a
Yeah,
dollar
yeah,
thirty,
the banks did well.
but FUTU did particularly well
Yeah, this
right
they did
after.
exceptionally well.
Yeah.
Yeah.
So
So that's a way to play these stocks. But like on the regular stock, we don't only go up more than $3. You have to buy that. They don't want to buy that less than the 40 delta.
yeah. So you did mention Airbnb. So
Yeah.
we can go to Airbnb. We can go there for reference. Um, this is a recent IPO. Right, it hasn't been trading a whole year yet. After it made its all time high, we see that it's basing out near its IPO low. The IPO low was 121, and it's finding some support here. Right, I was in this right around here, and then I sold it like right around here, so I should have actually kept it. I got nervous right around here. Um, but once it started to find some basing here, like you see, it's not going any lower,
Yeah.
right? And then we have earnings behind it where they lost on earnings, right? So it's a negative dollar 95 loss versus the estimated of negative a dollar and 15 cents. So that's 80 cents essentially
Hmm.
that they lost on. But we still see that after earnings was released, they still kind of just held this price right around 135. It's trading at 140 right now. Um, Still has some selling to go, but like what Fitz said, if you have a stock, and this is probably where we'll go into the smaller time frames. We'll go to each candlestick represents 4 hours, so that's going to be two candlesticks each day. So you have a move like this where it went from 134 to 140. That's $6,
Right.
and then 140 to 143. That's another $3, almost $4. All right, so almost made a $10 move. So off of that $10 move, say that you bought let's just say you bought an options contract there. You know, Fitz is saying buy the one way out the money, right? Because even though it's way out the money, it doesn't necessarily have to be in the money for you um, to gain
Make
a
money.
reward.
Because as the delta rollover, if it is a 25 delta and the stock is trading at the 50 delta, as it roll over, it doubles.
So he's saying
And
right here, okay, so we have, let's say that this currently, right now, the option is at 53 cents at Delta at a strike price of 141. So you were to buy something out of the money, which would probably be like right here around 22. The Delta is 22.
Yeah,
The
it could
strike
do
price
that.
is 155. So if this stock were to get up to 155, then yeah, you would double that delta from 22 essentially to 44, right? When it really get to 53, but at least the delta, the strike price would be in the money.
Yeah, and by then your option would be about $500, $500 right there
And
for the 50 cents.
just remember, Leon, like just because the delta is or the strike price is not in the money, doesn't necessarily mean that you will not profit from that. Like the closer that it gets to in the money, then yeah, you start to increase in your profit. But let's say that some news comes out where You know, we were just talking about Simon Property Groups, and a property, another company name comes out and says, "Hey, we're going to buy Airbnb," and it will send, or not buy Airbnb, probably like, you know, we want to sell Airbnb. We don't want to do anything with Airbnb because we don't trust how much profitability that they really have, you know, based on their earnings that they just released. Whatever whatever options contract that you have that's way out of the money, if it went up a little bit and then now it's starting to teak back down, you can still take your profits. Right?
Yeah.
You don't have to. That's like now the delta instead of 22 is probably 42, and now it's coming down to 40. So you can say, "Oh, I just take my profits now," because you know from $1.50 contract, I earned $2 on it, and it's not even in the money yet.
And
Based on
and
that, this stock moves so much already.
and one thing too, it doesn't even have to reach your strike. From the moment the stock move in your direction and the volatility rise, that's all you need. For the moment, if you're $20 ahead of the strike price and the stock move $10, you might make $200 on your money before it even reach your strike. So
'Cause I know we pressed it the other like a couple of weeks ago on, you know, not buying way out the money. And that's like Fitz said, that probably really more applies to stocks that don't have much movement at all, and you're expecting it to have some type of movement. So you know, as Fitz realized it, there's some discernment that happens
right.
where we have to discern which stocks actually have movement versus stocks that don't have any movement, and where you can buy out of the money based on that
Right.
stock movement.
If you're buying Pfizer, make sure you buy at the strike price. If you're buying AMD, don't go long more further than 40. But if you're buying Nvidia, you can buy $10 above the strike. I mean, above or below. What would you say? Above? If Nvidia is trading, if you think it's gonna go up and it's trading at $600, you can buy the 620.
Yeah, which they did report good earnings this past week.
Yeah, you can buy the 620, and if you're buying Nvidia, because Nvidia move $30 per day. If you're buying Google, you can buy the options 20 or $30 above the stock price.
Or even Amazon, because Amazon will
Amazon,
move
yeah,
20, 30
yeah.
bucks a day.
So
But
so
but you can't come near those options. But now this makes sense. I really didn't consider that because I've
buy
always
the
been stressing to buy in the money because of all of the different reasons, you know.
okay.
But this makes sense now. That thank you.
Yeah, so now you understand the principle, that because this is what I discovered, and that's between now, I mean last week. That's what I discovered. So it all depends on the stock that you trade. If you could see my screen, then I would show you this spread that I talk about. Or you could do, because I know you always ask about the spread. So you could see the spread that I refer to.
Yeah, with the institutional investors.
No, not only that one, but the spread. When I
How
say
can
buying
we,
a spread.
guys? How can we see? You know the two brothers. I think we spoke about them. I mentioned them. The Pete and John, the ponytail guys.
Yeah.
How is it that they can see where the money is and they can see the unusual activity? Are we able to see that without them?
Yeah, that's
Who's-
that black box. That's that black box.
What is that?
The black box stocks. Fitz mentioned it a couple weeks ago, and I think I'm gonna end up getting that as well because you could see.
That's a subscription?
Yeah, that's a subscription. I think that one you can see ahead of time.
Yeah, that's the one I saw photo on.
Because it's nice to see where people are putting their money. I mean, you know, a lot of times, because I've been reading, don't always follow the money because most of the people are wrong a lot of the time.
Right.
But it's good to see where money's flowing. And then, at least you can figure out what you want to do.
At least the bare minimum, see what they're doing.
Yeah. Yeah. Because I listen to him once or twice when he's on the network, and it doesn't always work out because I guess he'll tell you when he's in, but he doesn't tell you when he's, you know,
Yeah.
liquidating or moving or buying one down or up, you know?
Exactly.
Yeah.
Exactly. And one of them has been buying Jumia. I don't know how
You've been talking about Jamia for a very long time.
Yeah.
he was like, I like Jumia when it was first starting to go up. And then once it starts to pull back after making new highs, I'm like, yeah, I'll just wait. But I remember him buying, or can't remember which one of those brothers because they're both twins. But we see how high Jumia went, but they were still buying it like in April, in May. I mean, not May, April and March, and it still was going down. So now we're starting to see that the 200 simple moving average is starting to cross with the other moving averages. So it might start finding some upside after going as low as almost $15. I didn't even know it went down that low. So this might be another one just to keep on radar. But you're right. When it comes to finding what stocks are in the money and which ones are not in the money, or not in the money, where the money is actually going to,
Yeah.
you will have to have one of these platforms that will tell you ahead of the time. And that's what they use. They use a black box stocks or something of that where it's subscription based, or they're part of a hedge fund. Well, I don't think they're part of a hedge fund, but they're a part of some entity where they can get that information.
Is this a subscription that, you know, like a Netflix thing? We can just all chip in and then share the login?
No, they don't allow you to do that. I have it, but they have more than one. I have more than one computer, and I tried to use it on the next. The one that I get the subscription, and I tried to use it on the next one, and it wouldn't allow me to use it.
Uh-huh.
So yeah, the first one you do the subscription, and that's the only one you can use it on.
Right on.
And it's platform integrated. Like if you have an account with TD Ameritrade, you can still trade on. You can still trade on it using your TD Ameritrade account. Is that correct, Fitz?
I don't know for TD Ameritrade. I know it's a trade station.
Trade station.
Trade station, yeah.
So I don't know. I was watching a couple of the videos, and some of the stuff that you were showing us last week, Fitz, was pretty similar.
Yeah.
Where it show you like, oh, okay, this is where a lot of the big money is trying to get in on some of these options, and you'll see like, oh, okay, there was like a $2 million bid that was put in on the stock on a Friday at 4:30 p.m. when the market was closed. Like,
closed.
you just
So
like,
you
what?
guys can see that. That's what they do.
So that's always good.
That's the one I saw FUTU on. That's what I saw FUTU. There's somebody put. If you see it when you are doing it individually, it take a lot of time to search.
Yes, it does.
so that's the one I see FUTU on. They put I think they do the 180 something. A lot of money is on that option. I don't know. I don't remember for what date. So that was how I decided to just do that.
I don't know, but so that's always something good to look at. And then Leon, like I said, maybe in the next 2 or 3 weeks, we'll be looking at getting that subscription. And I wish I could share it. If there's an opportunity to, I would. But if I can't, then because I think it's what, $1,000 for the year.
It's less than that.
$900 for the year.
Yeah.
$100 off.
It's worth it. It's worth it. I can say it's worth it.
I can see you'll get your money back for sure.
I get the money back in a short while. Within a month you can make that.
Make that back easy.
Yeah.
So I know that we started off with saying that there was, the whole Wycoff method. I just want to make sure that Grace kind of gets the whole understanding of the Wycoff method using FUTU, and then we're going to go straight to some earnings. right? Where we have on the Wycoff method, this whole upside, right? So with Wyckoff, we have this level one or phase one, where phase one is just showing that it's just sideways action before there is some type of uptick. The uptick that happens is phase two. And then once phase two happens, then you have this consolidation. Um, this consolidation is usually phase three. I am shocked that it didn't break all the way down, but it broke down some way, shape, or form back to the support area. So once we have this consolidation here, that's supposed to be all phase three to four. Four was supposed to go a little bit deeper. So if this stock actually goes up higher, which it shows that the MACD and the RSI and even the TTM squeeze says that it's going to retest this 168, 170-ish area.
Mhm.
That if it breaks that area, then we're going to have a new high. But if it doesn't and breaks down, it's going to come back lower, and then that'll be a part of phase four, where phase four says it just comes straight down and maybe even trade below the 200 SMA price. But I don't see that happening with this stock since it's in the financial sector. Um, because this will have to just maintain, well, it doesn't have to, but at least right now is suggesting that it's maintaining this consolidation phase, and it's going to trade between 103 and 160. Kind of similar to what Peloton was doing at one point. So as we highlighted earlier, Peloton, it was going up. Let me we'll open up this a little bit more. So it was going up, right? And it came up right here. This is still all consolidation here. This is all still consolidate. It's like really just consolidating up from $17 damn near to 40 $69. Sorry. A strong consolidation, and then it started to make stronger movements on the upside. Now that's phase two. Still part of phase two, going up higher. When it started to find some rejection here, that's when it started to pull back. Now, this is the tough part when trying to identify where phase one, two, three, and four are on a stock that doesn't have a previous all-time high. Right? It was making its all-time high, and then, like I said before, anytime a stock makes a high, it has to pull back. Um, so it did pull back. It pulled back, tried to hold, but it just continued to pull back some more until it held this support area. So this support area was at the $100 line. So we see that the whole dollar 100, that not only that it held that support, but actually went back up from there. So this can continue to be phase one after, once it hits the support line. Phase one, phase two, and then consolidate phase three, and then you see it drop phase four, right? And it stayed at this phase four. And this is the tricky part for a lot of people too, where you're like, oh, it's back at phase one. I would just buy phase one. Sometimes you don't want to do that because when a stock makes a new high, it really does want to test below the 200 SMA price. And that's what happened with Peloton. Even though Peloton did have some news about, the child, which is so unfortunate, that so it did bring the price below the 200 SMA price. But once it was down there, once it became below the 200 SMA price, it hit this support line, and there was the same support that was back here. So right around this $88 or 80 or $78, $79. Once it did that, held that support. It's now trying to trade above the 200 SMA price. You know, um, so what I was saying, once it hits $90, then maybe that would be a good time to buy. And why I said $90 is because once it hit support, it started to make this whole like box here. So this is how I identify a lot of these breakouts, is when you have this box that's starting to form where you have strong support, you have the previous resistance, and then you have the price, the price trying to test previous resistance. And then that's what happens here, right? So I say, you know, if it holds $90, then that's the time to get on in. And it did that. And not only did it hold $90, it broke its previous resistance at $97. So I would always say, like, look for, especially on the upside, not when it's already up. Sometimes it's hard to identify when it's up, but when it came down exponentially, find that support area, see the distance between the current price and the 200 SMA price. That 200 SMA price could be your potential strike price on the options, right? So you would say, hey, let me call this option at $110, and the stock is holding support at $80. Maybe, you know, once you buy it when it's at $90, you say, okay, it's at $90 now, it's holding that support. Maybe it can retest that 200 SMA price, because everyone's still going to go work out. There's not going to be, once they already bought the subscription to Peloton, not like they're going to give it back just because America reopened. They're going to keep it. They probably not going to use it as often. It's probably going to be clothes hangers, but it's still going to be there for you know, be there for their accessibility. So I would love to see the moving averages cross above the 200 SMA price on Peloton. But this is another one of those stocks that Fitz was referring to that can move $5-6 on a day. Yes, it's a higher float, but it can move those $5 or $6 on the day. And on the 4-hour chart, it's above the 200 SMA price, which is also a bullish sign. On the hour chart, I would imagine it's above the 200 SMA price, right? And then on the 2-minute, 5-day chart, it just came from making an all-time high. Well, not all-time high, an intraday high. So that intraday high was made at 4:54 in the morning on Friday. So anytime this happens, I know the stock is going to go back down. And once the high is made, it's going to, on the intraday, it's going to trade below the 200 SMA price. It might take some time, right? It might want to retest it. And it did. It tried when the market opened. Tried retesting it there, tried retesting it there, but eventually it failed. When this happens, when a new high happens intraday, expect the stock to go below the 200 SMA price. And if it doesn't do it, you know, if it doesn't do it within the first hour of the trading day, just know at some point or another it's coming below the 200 SMA price. If not that same day, then best believe the very next day when the market opens, it's going to trade below it. It's just, that's just how it has been every day, all the time, intraday. Right. So that's this is a small snippet of Peloton to piggyback off of what Fitz was saying, particularly on the you know, buying out of the money. There's a lot of volume there too. The open interest is pretty big here, 4,200. The 145 calls, 18 cents, 21 cents. You know, it can move, but just know that, hey, it's pretty inexpensive and it can go down if you want to buy on the, if you want to do the call side. And if we know that, hey, a new high was created, we can buy some puts. And then the puts will show us that, hey, we can buy near the or buy out of the money on the puts and still hope that we get more downside because a new high was created intraday. So I personally won't do the puts unless I know that long term, and when I say long term, I mean for the week, that I believe that a stock will go down lower. I don't believe that this will go down lower. I believe that it has a lot more upside. It's kind of like NIO.
Yeah, at this point, I think Peloton might be done going down, but I did catch them, was like 2 weeks ago when that news just came out. I caught them on the puts.
That's right. You were in, yeah, when you were like, that was around That happened like in mid-April, right?
And it was just dropping like right in front of your face.
Yeah, I remember. I remember you were like, yo, you were happy because you're like, yo, I caught a little bit of the downside movement with the puts, and you were in it for like maybe an hour, not even like 30 minutes, right?
Yes, sir.
Yeah. So those are the type of moves that, you know, we know that a stock can go, this type of stock can go 5% real easy, real quick. So if you're able to catch that 5% move, then it makes, you know, your day a lot easier. You're in and out in 30 minutes and you can just go on and do whatever it is the rest of your day. Um so I don't want to get too deep into Neo, but I know y'all kind of see that this has upside now. It's no longer downside. I remember when I was buying the puts, I bought on I bought some on this no on this day, and I was able to catch some of the wave on this day, but I was not expecting it to really bounce on this day. I was hoping that it would go oversold and go down deeper. So now that it has done the reversal, I'm already out of this. From, you know me, I go in and I get out when it doesn't go my way. But at the same time, we see that now it's starting to make some upside movement. Um, and even the TTM squeeze is starting to show some upside as well. Um, so maybe Neo starts, you know, going a lot higher. It's already above the 200 SMA on the 4 hour time frame, and it's above it on the 1 hour time frame. The next thing, let's back up, sorry, is that it made a new high on Friday. So I would expect on Monday that it would continue to trade below the 200 SMA price until after lunch, at least going towards the end of the day, where it will start trading above the 200 SMA price. And then on Wednesday, because remember the market is closed on Monday, now on Wednesday it starts trading above the 200 SMA price. So I'm expecting the whole market to be red on Monday, on Tuesday, um, just because people want to digest the spending bill that President Biden put out. Um, so maybe, you know, there might be some sectors like financials that will continue to do well, but you'll have some of these tech stocks that will still feel the pressure of, you know, money management and where the actual money will flow to because of the spending bill. Um, but I still like Neo long term. Like I said, we follow the Wycoff method once again. Right, we see a couple of one entries. Let me zoom in a bit. We see a couple of one phases right here, but this was like one giant one phase, and then this was two, and then it just kind of slid across, kind of, kind of consolidating, kind of not, but this two became a more massive two. And then this right here is probably more of the three where it consolidated for like 2 days, 3 days before coming down. That would be four. Then consolidated again, or consolidated. What? It went sideways. That's one. Then went up for two, and then went sideways for three, and then went down for four. And then now that on the fourth phase, it's just kind of going sideways right now, just in this whole consolidation zone, right? So someone could say that, hey, that this is another four right here, and then this is one. So as another expert investor would say, anytime you see that one phase, just buy at one, right? And this add at one, but at least if you're going to add on the one phase, at least add on a stock where it makes sense long term. If you're doing that long term, but if you're doing it short term, just wait for it to balance. Wait for the stock price to balance out before getting back in. But I do see this going up higher because it's trading close to the 200 SMA price. Um, there was a earnings that we didn't get the Zoom. That's what it was, Zoom. So Zoom is another one that trades like $5 a share on the day. Oh, there you go. See, $5 on the day. And that was only a 1% move for a Zoom. All right, but currently it's trading. I was doing this analysis for someone before, but currently it's trading. It came from its all-time highs at 588, and we see that it just continued to consolidate all the way down or drop all the way down. This is all phase 4. Every last bit of it, phase 4. Phase 4 kind of stopped right here, and then became like 1 to 2, kind of more 2. A little bit of 3, but definitely 4. That exponential downside, that's 4. So it's trading below the 200 SMA price. I should probably move some of these lines. All right. So since it's trading below the 200 SMA price, we know that, okay, some type of support has to be created. So we see that at 273, maybe 275, this will make it even. 273. 273, we see that as support. Why we say that as support? Because I'm looking at this price right here, where it kind of bounced right here before going up. And now I'm also looking back here, where before it started to make this upside, that was previous resistance, 276, 276. It's not an exact science, but mid 275. Let's just say that. Call it that. So what I would tend to do is just draw the line there, or duplicate that line. Put it right around here. So okay, this is support. 270. 270-ish. I keep on moving that number. I'm sorry, y'all. Active. It's not exact, so I'm just trying to be as close as I can. So I'll just say 276, just to be on the safe side. 276. So now that this is phase 1, again, this is phase 1, and phase 1 is looking to accumulate the phase 2. We're seeing that it's trying to come up to the 200 SMA price. Maybe on Tuesday, when the market closes, there will be enough news to push this price above the 200 SMA price. But rarely do I see that. What I will see is that if there's positive sentiment, it will push it right to the 200 SMA price before coming right back down. But it would hold. It will hold like the next resistance line, which would be 342. So if Zoom comes out with good earnings, I expect it to go to 342 after the market. Well, after the market on Tuesday, obviously, it will get to at least 342. And then going into Wednesday, it should hold 342, looking to go above this 388, 380-ish price, price point where the 200 SMA price is. We break it down by the 4-hour time frame. It's above the 200 SMA price, so that kind of gives it a good idea of where it could go. But also on the downside, we're looking, if it doesn't break, and if it doesn't break above that 343 and it comes up with some type of bad earnings, expect it to come down near this 200 SMA price on the 4-hour time frame, which is around 318, 320. So really use the 200 SMA price as the guide of where the stock could go based on its earnings. So on the daily chart, we don't see that the 200 SMA price is below the stock price. We see the stock price is below the 200 SMA price. And I'm not saying that it's going to go down to 270 or 260-ish, Not saying that's going down there, but I will say that if it doesn't come out with good earnings, 318, 320 is a good area to think of where the price could go um, on this. So maybe, later on in the week, going to Thursday and Friday, it has more upside if the earnings are good. If the earnings are bad, it's definitely going to go down lower. Um, and then even if we like, let's say we looked at the option, we said, okay, options, the options volume out way out of the money. like Fitz would say, like, yo, no man, look out the money. I love your energy on that. Um, I guess I have too much going on. Um, you see that out of the money, there's not a lot of volume going on here, at least from Friday on the June 18th expiration date. So the further out we go out of the money, the less volume there is. Um, but when we come up a little bit closer, we see that there is some volume. We see that there is some open interest, and either one could actually not work in his favor because there might be open interest, but the volume doesn't really work. It's not enough to move the needle. So we just need a little bit more volume to help move the needle. And we see that here, the 350 calls. So maybe it goes up to 350. And then maybe you're like, hey, I want to buy the out the money for 40 calls. And it goes like, $4 or $5 um, after the earnings is released because you don't want to buy before earnings. So you say, okay, well, I'll buy the 70 cents on the call option. Remember, the delta is only 4, right? So that's the idea that it would actually reach in the money is 4%. So we know that that's not really in our favor. But if it has the volume behind it after the earnings, then it could definitely be in the favor. So, I'm just mentioning a whole bunch of stuff to take into consideration if anyone were to buy any of the options or the shares in Zoom, because I'm still a firm believer in Zoom. I believe Kathy Woods is probably a firm believer in Zoom. And when she buys stuff, things start to go down until they go up. so
That's
I
not
always
true.
have
That's
to
not true.
say what?
That's not true. That's not true.
That's not true. Oh my God, she bought more Twitter and it went down more, and I was like, oh okay. I'm like, sheesh. Like, thanks, Kathy. I thought you were on our side.
yeah, so you follow her. When she go up, you buy when she buy you buy going down. You buy the
Yeah, I
put.
go the opposite. Absolutely. Go the
Yeah.
opposite.
Like when the Nigerian brothers speak, you don't listen to them.
No, I don't listen to them. I don't buy what they buy.
Yeah,
I
don't buy
listen
what
to
they
what
buy.
they buy. I don't buy it.
Yeah, I stopped buying what they buy.
Yeah, and never. I always do it and never find a lucky one. Always go down.
Like the minute, like for instance, when I was holding VUZI, and I was like, oh, okay, I found one that I think that's going to do really well. And then like 2 days later, one of them said that they bought it. I was like, oh fuck, now I got to get out because I don't know how they're going to manipulate the actual stock price because that happens.
Yeah. And anybody's in GameStop?
Mm-mm.
Nobody's in GameStop?
No, I left that one alone. I wanted to get into AMC.
Yeah, because I see a lot of money pouring into AMC, a whole lot. And I see for the 300 strike, I see $382,000. That was the last 340. It came in at 359 Friday evening for the 300 strike. And
AMC?
no GameStop.
Oh, I was about to say. No.
For the 300 strike at the 6 month, 18 day, that's June. the 300 strike, $382,000, right at 4 o'clock Friday evening
So
in June.
okay, yeah, I can see there's a lot of volume there. Yeah, there's a lot of volume, a lot of open interest. I can see that. I can definitely see that. I'm still a punk with that one because I can't control it.
Yeah,
I'm like, there's too much like movement,
drama, too much drama.
too much drama. That's the correct, yeah. Because like based off of what? Like, that's how I felt about
Sentiments,
AMC.
based off sentiments.
Right.
Yeah,
You know, once the sentiment is done, it's going to collapse. We just don't know when. Like I thought AMC was going to collapse on Friday, but it probably won't until after the weekend because you know the box office, like a lot of the movie theaters, they're open up this past
yeah,
weekend. So I was like, let me just wait until on Tuesday to see what happens because I think the AMC is just, there's no way it's worth like $36 a share right now. Maybe eventually it will be, but not right now. Especially since they had the major stockholder, they had a major stockholder that sold a lot of their position on Wednesday.
yeah.
So that finally like opened up the levy to break $14.50.
Okay.
Because I was telling people in another group, they were like, "Oh, should I buy it?" And I said, "If once it breaks 14.50, that's a buy." So they bought it. I didn't get a chance because I'm not in front of the computer at that time. So they ended up buying it, and then I think they sold it at like $20. And one person, well, no, two people were like, "No, there's no way it's valued this high. It should go down." And I said, "Look, the previous high was $20. It broke $20. I don't know. Like I think it still has some more upside."
Yeah,
But they were doing the puts on it, and I was like, I would not. I would strongly bet against that.
yeah,
Yeah.
yeah. That's never a good idea.
No,
Never a
but
good idea.
some people have that short sellers mentality
Yeah,
only. Like some people only
that will
advise
kill
that.
you. Yeah, so I see a big buy came in right at the last minute. So
You bought
somebody,
GameStop at the last minute.
no, I only I had AMC the very first time when this GameStop thing came up. I
Yeah.
bought it. I saw it and it looked cheap to me and I bought it. So I catch the very first time when it came up, but I never bought it again.
Yeah, GameStop's movement, which I still don't know what it's really based on. GameStop's movement is
Mister,
it,
right?
it, the spread is the spread, right? It's going to be like 50 cents to a dollar. The technicals are behind it though. That's the one thing
Yeah.
I definitely do see with GameStop.
Hmm.
That the technicals are behind it. Everyone had this strong red day on Friday, right? GameStop, AMC, um, Express. They all had, these are all the meme stocks and KOSS. Well, no, I think KOS, no, they still had a red. But these all still have the technicals, and you see how they all move pretty much the same. Um,
Look at the squeeze too.
mm, for KOSS,
No, no, no. Oh, you mean yeah? All of those work together. I'm just talking about game. Game. I thought it was on game.
Cost has no options though.
no, it doesn't. I wanted to buy the shares when I first mentioned it. I already knew, like, I was like, oh, okay, they don't have options, but I knew that it could at least go. I think it was the time it was on this day that I was considering buying it. And I was like, oh, if I buy $20, $20 a share, At least I can get $1, if not $2 off of it. And so I would have been content with that. It definitely went up to $28.
So you know, you're talking about GameStop. I'm looking here and I'm seeing somebody place for the 7th month, the 16-day, almost $1 million on GameStop for the 800 call.
Wow. Oh, hold on. What expiration date?
The 7th month, the 16-day. 776,000. Is that person stupid or what?
Oh wow.
You saw it?
$800 call, right?
$800 call.
Wow.
Almost $1 million. I don't think that these
That's
were the
one
guys.
person?
One, I don't know if it's one person, but yeah, one person. 776,000 for the 800 call, 7 months, 16-day.
I hope he hits. You know, I hope he hits, man. Wow.
Wow.
So this is what I want you guys to understand as we talk about the delta. Whenever somebody buy a stock like this way out of the money, this stock doesn't have to hit the strike price for them to make a ton load of money.
Correct.
That is what I want you to understand. It doesn't have to go up to $800. As we discussed earlier on, even though you buy it out of the money, it doesn't have, from the moment the volatility rise and it's in your direction, your price automatically go up, begin to multiply. Because option is not based so much on movements, it's based upon the volatility, the rise of the volatility.
True.
Because the stock can move, and if the volatility don't rise, the option price don't go up as much. So even though it's placed at 80, this person can place and they can say to themselves that if it goes up to 300, they're good. Because maybe they double their money, whatever they put there. So this is what you have to understand about option. Option is different from buying shares. As the volatility rise, the stock price rise, because the other strike price, the volatility can go up on the other strike prices, and the one that you buy, the volatility don't move on that one. So this is what the persons are betting on, that as the price go up, because if they start jump up $30 or $50, you're gonna make this option a whole lot of money.
Oh yeah, especially you buying that deep out of the money.
Money, yeah.
Doesn't matter. It doesn't matter. Like
that's what they call a bullish option. Guys, it's way out of the money. So it causes the delta to because okay, if you buy an option and the strike the delta is 5 and the stock is at the 60 option, at the 60 delta, and if the stock hit your 5 strike, multiply how many 5s you have in 60.
300.
You see what I'm saying? And with the volatility rise, it's a whole lot of money. So these are what these guys are betting on. So these guys know something maybe that we don't know. You might hear that Amazon buy them. Amazon is buying everybody, it seems.
Yes.
And if that happened, all it would need is a rocket.
Oh man.
To the moon, as CONN to Reddit, guys.
To the moon.
To the moon.
Everything to the moon. Sailor Moon.
If a rumor like that comes out, the stock would go to the moon.
It doesn't hurt that the options are relatively cheap in comparison to, $48 in the money, $51 in the money. Like that, $7 outside of the money is pretty very cheap. So I don't blame them for buying it at a cheap price, but that commends what you're saying. If it goes up to $300 from where it's at right now to 22, that's still some good upside, but you're right. It's with the volatility. If that once that volatility kicks in, then it's easier to see more upside.
Prices what go up when the volatility kicks in.
Yeah, because right now the implied volatility is higher than the historical.
Yeah, one thing also I want the other guys on the other side to know is that whenever you're buying option, look at your volatility, the strike that you're gonna buy. Look at the volatility and that strike price comparing to the others. Always
To
compare
compare the
that to the others.
volatility.
And if it is higher than the others, don't buy it. It doesn't matter how you love it, because as soon as you buy it, it's gonna drop.
All right, so
And you
let's look
option
at the
price.
volatility of this $800 call. Oh, let me come on. What in the world? My laptop is freezing. Hold on.
You need to take out the thin viz.
Say that again.
The thin viz. Have the thin viz up.
What is going on? So I want to get there we go. I want to get the volatility of this $800 call. If my laptop stops freezing. Yeah. Here we go. Thank you. So this is the $800 contract. All right, I'm gonna move to level 2. This is the historical volatility on the lifespan of this contract. Once we go to the smaller time frames, should see the implied volatility actually. Nope, it's not showing it on here. Oh, that's right. The implied volatility only shows it on the actual stock. It doesn't show it on the options. I keep on forgetting that part. Just trying to back up what you were saying, because when we look at the implied volatility of the actual stock, it's fine, right? It's well, not fine. It's slightly above the historical. Historical is at 11. The implied is at 25. But when we look at the options contract, 800.
But you know that it's below the 50. If you go back right there, go back a little bit right there.
Go back to here.
Yeah, you see, it's still below the 50 though, even though it's a little above, because that if somebody spends so much money there, then automatically the volatility will rise a little bit.
Sure.
So, but it's below 50. It's below the half.
That is true.
So you don't want to buy an option that is above the 50. So going up to the 100, because as soon as you buy it, it's gonna fall. You're gonna lose money right there.
Yeah.
So this is still a good place to buy it. Just an example, you know, I'm not saying you should, but I'm just saying that would be a good example, you know, because if you buy it above, it's gonna fall. As soon as you buy it, if the volatility fall, you lose money without the stock even moving.
Well, I would love to see if it holds this 220 ish area on Tuesday before I even buy, just because of this red candlestick. Like all the meme stocks, I'm kind of like that on. If it will pull back just a little bit more, which it shouldn't, because it's a blunted candlestick.
Yeah.
But in this past, when it had a blunted candlestick like that, it still went down. Like this was a little blunted, not a whole lot, and it still came down. This was blunted, but it came up. Blunted, went down. Right. This was kind of blunted, but it went down, but it had a reverse, right? Because it had a little wick here. And so it came down first and then went back up on this day. So blunted candlestick, next day was a green candlestick. So if it can happen here where it's a blunted candlestick and then a green candlestick kind of engulfs this, definitely buying it. Definitely buying it. And I probably would even jump in on that contract too, just for a little upside. Um, but yeah, that one I would have to like practice a little bit on, which, you know, I know we typically don't get to practice doing the on-demand section here of Thinkorswim, of the Thinkorswim platform. I always think that that's a really, really good.
Because it's not real time. It's not real time.
It's not real time, but it gets a chance to
Yes, we
help
can see.
practice and
Yeah,
applying the strategy.
yeah.
So it's real time of the day that it happened on, but
It's, I think
not.
it's about 15 minutes. Within 15 minutes behind the time.
You're thinking of
Paper trade.
the paper trading.
Oh yeah, yeah. Okay.
Yeah, not on demand. That's real time. That's like whatever happened on that trading day. That's what happened. But
I
paper
don't.
trading, yes, it's 15 minutes. And when the market opens, that's 15 minutes delayed.
Yeah, I don't really trade option on the Thinkorswim. Trade it on the E-Trade platform.
Oh, you sound far away now. What happened?
No, I don't trade option. I don't trade option on the Thinkorswim. I trade on the E-Trade.
Okay. Okay. Yeah, and I kind of do both. Well, I trade shares on the E Trade because I feel like their shares are the options contract always feels weird every time I get on E Trade.
Yeah.
Um, it just seems a little different, and it could be I'm just biased to Thinkorswim.
No, have you? Which one of the E-Trade you use? Power E-Trade for option.
No,
So
it's
that's the one you need to download. Power E-Trade.
our E Trade.
That's the option. That's the option one. Power E-Trade.
What do you
So they
mean?
have
That's
two
option?
sites. That's the option platform.
So okay, so for instance, how like on Thinkorswim, you have the stock price platform right here, and then you have the
The
options.
option, yes.
So
So
that's what you're
each,
saying for E Trade.
yes. But
Okay,
you can also trade stocks on that one, but it's give you a clearer view for the option on that one.
got you, got you. Now I understand.
Because I have both, but I don't use the one that you use. I use Power E-Trade for option and stocks.
Because sometimes it'll be good, and I'm like, oh, okay, it's good, and then sometimes I'm like, what are these prices? Like,
Oh,
where's
Power
the-
E-Trade is very clear, very, very clear on that side.
got you. I'll definitely take a look at that.
Mm.
I'll definitely take a look at that. Let's I don't want to go over Express. What was another one that we mentioned out of the earnings? Um, Maybe Conn's DocuSign, Five Below. So C O CONN. Conn's, like I said, it's a restaurant stock. Was it out of Florida? They're coming with earnings on Wednesday. It's a Wednesday, Thursday, Wednesday, Tuesday, Thursday. Um, I feel that it's in this whole no, in this whole consolidation phase, which is typically phase three. Um, this was phase one, then we have phase two, came down like after phase two, and it hit this high, I guess, came down, kind of consolidated. So I guess this will be phase three. This is phase four. Um, this is kind of all phase one. right? And it's entering all into phase two, retesting the previous resistance. Um, this looks like a breakout chart. This looks like it wants to break out, and it wants to break out above this, above $24. I feel that if they do come out with earnings, because they're um, expected to have good earnings, just based on its pre-pandemic lows, which was before the pandemic, it was right around here. So, that was around $15. It's above that, and it's trying to get to its pre-pandemic highs, which is around $27 a share. It's a low float stock. It relatively only trades like 900,000, 500,000 on average. But because it does that, um, once people start flocking into this type of stock, it can go higher based off of its earnings. The last time it gave earnings, it went from $15 up to $23 in 4 days. So that's what, $8 a share essentially in 4 days. So I'm anticipating the same type of result, that it goes up higher. Um, Reopening everything is going to make people want to go and go out. Hold on, is Cons is hold on. Now I have to double check if Cons is a restaurant. Could I keep on? I might be confusing that one with another one, which I tend to do
Cons,
sometimes.
consumer,
Specialty
discretion,
retail. It's not. Oh, it's consumer.
distribution,
Yeah,
home plus celebrate
home
first
plus.
part.
Home plus. Sorry about that. It's not. It's not a restaurant. Why people think it was a restaurant?
But they
It's
had better than expected earnings the last time, fourth quarter.
right. So they're the ones that deal with home goods. So like home. What was not Casper? Casper was another one that was doing really good. There was a couple of home good specialty realty companies that did extremely good. Lovesac, that did really well. This is another one that's in that category, dealing with furniture and living room, dining room, bedroom, traditional and specialty mattresses, refrigerators, freezers, washers, dryers, um, and electronics. So 4K, ultra 4K, even 8K. So people did buy a whole bunch of stuff for their homes
Yeah.
this past this during the pandemic, and it's a low float with a 10% short float interest. We're entering into a bullish market, um, again, so it's going to be really bullish these next couple of year and a half, maybe two, depending on the elections, the 2 year elections that happen in 2022. So hopefully that this stock that has relatively low volume here will gain a lot of volume when they release earnings again this week. So I'm looking forward to this one. I still say on Tuesday it comes down a bit, and the only reason why I say that is because of this red candlestick. This red candlestick has a wick. Even though it's traded above the 5 EMA, the potential of it coming below the 5 EMA is also there. So it might fill some of this wick going down and then probably bounce, go back up. If it does that on Tuesday, then expect Wednesday to be a green candlestick and then Thursday to be even a greener candlestick if they have good earnings on that day, which would be Thursday pre-market. So really looking forward to seeing this one actually do something. I believe they have options too. Yes, they do have options. Um, and their options probably doesn't have a lot of volume behind it, but they are relatively cheap, like 30 cents, 20 cents. for the options. See what if there's any liquidity behind any of them. Not really. Maybe the $25 call has some liquidity behind it, some volume behind it. Um, if I were to buy this, I would probably more than likely I would buy the shares. I wouldn't buy the options just because the volume is not really there. For the June options, maybe July has some volume. Not really. Still like a desert. So
Yeah.
if anything, that if they were to come out with good earnings, that would be one that I would look at just to because I know it can go up at least $8 a share after the release of their earnings. Um, and then there was what was the other one? So it was DocuSign. There we go. What is DocuSign? DocuSign. DoCU.
COCU.
Yes. So, so DocuSign is definitely another one that it's a pandemic play. Um, will it do well? Hopefully. Right now, it's like you see, I was trying to get in and this is where my patience wasn't with it, right? Because I could have definitely rode the wave on up. Something told me I was able to identify the phase one, but seeing phase two, and this was last year in March. Seeing phase two, wasn't able to see that yet because my education wasn't there, right? Education comes with more and more practice. So this was phase two, consolidated a bit. It did spike during that consolidation of phase three, but it did come back down, and it's still like part of this consolidation until February of this year, where it came down to phase four, and it still came coming down on phase four. So now we're anticipating that the earnings will turn this stock around so that it can go from phase one to phase two. So right now it's kind of just in this phase one area where it is holding support at 179 right there. 179 was touched right here. I could say 180 right here. So from there to about right, let me just draw a line. That'll make it easier. So when we have this line right here, oops, I don't want to do that. Duplicate this line. There we go. We see that there is a zone that is trading in. And this zone is from 177 to roughly 275. So that's $100 worth, essentially, um, of potential upside. It's trading about $20 below the 200 SMA price. So maybe it'll, like during the week, it would trade there and then get rejected by that price until earnings comes up and then allows the stock price to trade above the 200 SMA price. On the 4-hour time frame, we see that it's still trading below the 200 SMA price. And we see here, this is what I'm referring to about again rejected. Like you'll see it go up, have a strong green candlestick, and then red candlestick try to bring it down. The red candlestick will try to bring it down. So it continue to get rejected until the moving averages come close to the 200 moving average. So the 5 EMA, 20 SMA coming close to the 200 SMA. And then from here, like what we saw with Simon Property Group, once the stock price and the moving averages, all three of them move above the 200 SMA price, then we have more upside, right? Well, the only time when it doesn't do that is when the stock price is overbought, which is right here. And we see that happen right here. stock price is overbought. It was overbought here. And we see that the price is kind of rounded out before coming back down because it was overbought. But because it was overbought, it actually stopped at the 200 SMA price, tried to go back up, retesting previous resistance, couldn't break it, and that's when it came back down. And then both moving averages came down with it. So there's more than one scenario that happens with it. One is it overbought. If it is overbought, then expect it to reverse in price. And then two, once it reverses in price and comes to retest the previous high, if it can't break that previous high, expect it to pull back. And it took a couple of days. This is 1, 2, 3. On the fourth day, well, half of the fourth day, that's when it really started to pull back. And then we just see strong red candlestick, couple of buys, strong red candlestick, and then it just kept on going lower and lower and lower. So maybe that the earnings will cause the stock price to have a reason for the stock price to go not only above the 200 SMA price, but the retest its previous high at 234. So if anything, I would say like, look, you could probably make a call. This would be your target. Your target would be 234 price, and with some type of understanding that if it's overbought at 216, maybe 215, then you should probably just get out and wait for it to rebalance. But I definitely can see it coming back up to 230 with positive earnings. It needs a positive earnings behind it. Um, so, Fitz, do you have any thoughts on DOCU? Leon, do you have any thoughts on DOCU at all?
Just the analysts on TV saying that possibly the stocks that were hot during the pandemic, the stay-at-home stocks,
Yes.
this is the pullback that we're seeing. Like we see DocuSign come down.
Yes.
Some were saying that it's kind of over in a sense, and some were saying a company like DocuSign is just consolidating or it's cyclical. There were just all different opinions. Honestly, all different opinions. I'm kind of just staying away for now.
Um, but it looked good. It looked good on the chart right now.
It does.
Yeah, it looked good. So you see, these guys can say whatever they want to say.
Exactly, because they get paid to say these
Yeah, they
things.
get paid to say these things.
Someone pays for them to be there, and there's a reason why they're there saying what they're saying.
Right. So look at the sharp. Look at the sharp buying on the chart. You saw it right there, and look at the squeeze. You saw what happened right there?
Mm-hmm.
That sharp buying right there, a lot of money pouring right there. So. Right there, the MACD cross, everything is above the MACD cross and everything. So this is a good sign right here. And DocuSign is not just pandemic stock. If people, as long as they can get the proper information, they will do it straight. They will do it continue to do it from home. Less time, less money.
Agreed.
Yeah. So
Yeah, I see DocuSign being around
yeah, it's
for
a
a
good
while.
that there's no going back. But all tech stock came down, so everybody came down now, and they are consolidating to take the time and go back up.
Now this is where I wonder if DocuSign is being used on Ethereum, since Ethereum is like one of those cryptos that effectively is used on like real estate. Like if you wanted to buy property, you could definitely buy it through Ethereum. Or I wonder if any type of documents are being signed on Ethereum using DocuSign. Those are the things that will pop up when I start researching, like, or is this something I haven't looked at the background on this in comparison with Ethereum, or it's just coming up right now as a thought?
Okay. Um,
Yeah, I like that. I like it.
yeah, it looked good. It looked good. Sometimes the chart has never been wrong. But if you're looking on the daily chart, sometimes you have to understand that you have to give it a little time for it to move.
Yeah,
The daily chart is different from the hour chart
right.
or the 50 minutes chart. 15 minutes chart at interday. But sometimes the daily chart, sometimes it's 2 day, a day, 3 days in order for it to move. Or the weekly chart, sometimes a little more to give it the move that you desire. But it looked very good on the chart. And the buying, a lot of buying came in down here because you see the sharp where the yellow started right there,
Mhm.
the sharp movement right up there. So a lot of buying came in right there.
Come on, right here.
Yeah.
The histograms are getting smaller.
Yeah, getting smaller, sharp and the sharp, and then it start to squeeze now. It's consolidating now. So
So maybe during the week it will
yeah,
trade above the zero line of the TTM squeeze,
yeah, but
and who knows? By the time we get to Thursday, it's already overbought.
yeah, it because it went up $2 over $2 on Friday. And not only that, but it hold it right through.
I don't see this going. I can't see it coming back down to like the
No,
180s.
no, you have nowhere
That
to
is
go.
hard. That part is really hard to
No.
see. I don't know. This will be something to watch, definitely.
Yeah. As long as the market is in the green on Monday and Tuesday gonna go up. If it's you see sometimes when we talk on Sundays and it might look like what we say might not be okay if the market turn red. So what you have to understand that what we say it all depends on the situation Monday morning when the market something can happen overnight
Right?
and it cause the market to go down. But that doesn't mean that the stock is not doing what it's supposed to do. But if the entire market go down, the price of it will go down too. Until when the market's steady and go back up, then everything go right back up.
Mm. So it's almost 9:20 now. I want to be respectful of everybody's time. I know we've been going at it for at least 2 hours, but I want to make sure, like, are there any stocks that people want to go over before we start wrapping everything up?
Nobody responding.
I know, right?
All right. So look at this one, ETN.
D
ETN.
DTN.
No, ETN.
Eaton Corporation. Oh, nice. So what's this one about?
Yeah, that's a low float there.
Um, See that it has some dividends with it. I see it has dividends, and I know Angie loves some dividends, right? She's all about the dividends. So this is a good one. It just made
And
a new high though. I
yeah,
haven't
but
really
they pull
pulled
back. They pull back, yeah, and so on. So
This is true.
back. Yeah, Angie's always like, "Where's the dividends at?" Like, so here we go. This is
yeah, and see up in nine and maintain outperform to 160 price target.
one six.
So
I can kind of see that with the hour chart. Seeing that it's trying to go over the 200 SMA. I can kind of see that. Um, this will be one to watch.
yeah, keep an eye on this one.
What is it?
I think it's a medical. Let me see.
Organic growth guidance.
Organic growth. Yeah.
Uh, It's grow organically. See the buy ratings. There's a lot of buy ratings. That's always good.
Yeah.
Increase.
So keep an eye on that one. And the next one is, my final one is ENPH. This is one of those you can buy out of the money. ENPH. Always remember that it's a risk, but buy it near coming on to earnings.
You said
Don't
EM.
buy it for a week. Buy it for July. I think it's July, the earnings. And you come buy it for the time coming near onto the earnings.
Oh, what's the ticker again?
ENPH.
P.
ENPH.
Ah, that makes sense.
M-phase
Yeah, that
energy.
makes sense. Got you. That makes sense.
So if you're buying it, buy it for July. The earnings is the 7th month, the 27th.
For July.
Yeah, don't buy it for a shot. It will move before, but make sure don't buy it. I think July is the best time to buy it for.
Okay. Energy.
Yeah.
Yeah,
The earnings.
energy stocks haven't been doing pretty well, so I can see why you say that.
Yeah. Remember, it just went up to $229. It came down back.
Yeah,
This is
came
one
down
of, yeah.
to 200, which is what I like to see after a stock has made its new high. That
Yeah.
took some time to trade below the 200.
And it's going up back now. It's consolidating a little bit there.
There goes this little box that I mentioned before. At the very beginning, it's like once it bases, it starts to find this like strong uptick. Like this right here would have been that strong uptick, but even here, the strong uptick, where is it retesting? Retesting the previous resistance. All right, previous resistance was right here at 130. It held above 130 at 132. And we see that these moving averages are starting to cross above the 200 SMA price. This only the 5 EMA for now, but the 200, but the 20 should cross above the 200.
Yeah, this is going sideways right there.
I can see that.
So
that's a good one.
This is the money.
Buying, what was it last week? It was not Tiger, which I should have bought with FinTech. It was when. Trying to remember which one it was. Where are you? Because you were like, "Oh, that looks really good," and I was like, "I know," and I still didn't buy it, but it did go up higher.
Okay.
Oh, I got two stocks. Everyone maybe should keep their eye on. One is a STZ Sam Tom Zebra Constellation Brands. I heard the guys on TV talking about it. They own Corona, Modelo, and some other consumer products.
Yes.
And the chart looks really nice.
It does actually. Yes, it does.
Yeah.
It does. It's like consolidated.
Yeah, that looks good.
So I put that on my list to watch out. And especially now that Mr. Fitz told us about out
The movements.
I think his internet went out.
Okay.
Yeah, I don't know where Leon went to. Like I know he had more of a statement to say onto that.
Oh, yeah. I'm so sorry. Here, I'm back. So yeah, Constellation Brands. I was watching that. That's from the guys on TV. But then I was reading something about this Russian woman that became the richest woman in Russia from kind of like the Russian Amazon.
Oh wow.
OZON. And that chart, it seems like it's about to. It could very possibly go up because let me look at my chart and see why I liked it.
What's the ticker again?
Oscar Zebra, Oscar Nancy.
OZON, yeah.
So I was looking at it only came out about 6 months ago, I think, or so, when public. But when I look at the 3 month, rather the 3 month, you could see mid-March, end of March, and then twice now in this month. Seems like $52 or so, maybe a little, 50 to 53. Seems like it's the support range, and then it kind of shoots up anytime after that. So I'm thinking it might do that same, the OZON might do that same thing.
Yeah, I can see that. It bounced off of 50 a couple of times.
Right? Bounces off 50 a couple of times.
And each time it went at least, what is it? Well, it's 50 to, that's at least $10. The first time it did it, well, at least that's the second time it did it.
And like I said, it's this is Russia, and this is Putin allows this to happen,
Yeah.
So I think that, it might be manipulated. It really might be manipulated, but the important thing for us is that it bounces off that $50 to $52 range.
Yeah, you're right. Once it bounces off of there, it typically goes higher. So
Typically does. So something to possibly watch out for.
Yeah. Don't worry about
Because I think Vladdy needs to make some money.
You don't have to worry. Putin don't even know that you are there, so you don't have to worry.
French guy just became the richest guy in the world. So I think Vladdy might have something to say about that.
No, not a fan. He's not a fan. Especially if they're getting their oil from China now. So he's like, I need to make my money.
But that CEO of LVMH, he's the richest guy in the world. And I think he's married to Halle Berry.
What?
Right? I think that's who he's married to. So she did well for herself.
Oh yeah, she
Wow.
was doing well beforehand.
Definitely.
Now she's definitely doing well.
Yeah, I think that's who he's married to. And because of all this revenge buying that these rich people are doing,
Yeah.
the stock just, I don't know, it went bonkers. And he's the richest guy in the world now.
Louis Vuitton.
LVMH, Louis Vuitton, Moet, Hennessy, yeah.
Yeah.
They own a lot of different brands and things. So, but OZON and STZ.
Oh yeah. I'm with that. I like Ozone for real. STC.
Right?
Yep.
Yeah.
I'm glad you guys agree, because I also noticed, and I was like, hey, wait a minute, that's could that be that obvious? That every time it hits that range, it just shoots up.
That's what we're looking for. We're looking for, past behavior that kind of repeats.
Yeah.
What time frame? What time frame are you on? The 4-hour time frame?
Yeah, this is the 4-hour time frame I'm looking at. Just because, like what Leon said, it hasn't been out way too long, so I wanted to see what it looked like.
The only thing, guys, with Ozone, here I'm looking at it again. The options, the strike price is $5 intervals. From my experience, and maybe you guys could help me understand, but I don't like when there's such large intervals between the strike prices.
I kind of agree with you on that one,
right?
Because of the fact that it takes a lot more movement of the contract price to get more value behind it. So I'm with you on that. I'm with you on that.
So this is like a slow cooker, right? This is like a slow cooker, this one.
Yeah. When it comes on to option and slow cooker, that's not I don't think that works so well though.
Yeah.
You want the option, you rather to get something that move a little faster.
Yeah.
Yeah.
But I might check him out. I might check him out, maybe 2-3 out of the money.
If you're buying this, no. If it's a slow cooker, you can't buy this out of the money. No, that's what I'm saying. When they are slow, you have to buy them in the money. Because if you buy out of the money,
right, theta is going to kill you.
as the
right.
day pass, the faith are gonna kill you.
Right on.
You only buy stock that move $10, $5, $15 out of the money. So don't buy like these stocks out of the money. You have to buy in the money.
Fast ones in the money, slow ones out of the money.
Slow ones,
I say that I say
fast one out of the money.
slow ones in the money, fast ones out of the money. Sorry.
Okay.
Slow in, fast. All right. Does anyone else have any other stocks that they want to mention? What was the name of that? There's so many different stocks. I know there's not a whole lot of time that we can go over every last one of them. But I hope Grace, I hope you're able to gain some information. This is her this is her second time coming in and trying to grasp some information that we're talking about. Once again, thank you for coming in and stopping by. I know that we're all learning. We only learn by having this back and forth, this conversation. Fitz definitely continues to enlighten us with little things that we probably didn't recognize before, so we can make those fine adjustments to become better traders and investors. So once again, thank you. And there's only I can't like really thank all of y'all enough. Your commitment to wanting to be successful and self-reliant in the stock market is only showing itself every time that we come and talk about the stock market. So thank you so much. I'm truly honored just to be here in your presence. Right.
Thank you.
I really can't remember the name of that stock from last week, Fitz, that you really liked. I'm trying to. It wasn't Beyond Meat.
Which one? WDC?
No, WDC you did well on too. It was one that popped up on one of the scanners, and you were like, "Oh, I like that one," and you're like, "I'm gonna watch that for the week." I just can't remember if it began with a R. I thought I highlighted it.
Oh,
Was it ANT? It wasn't ATNF. I don't remember. I'll message it to you if anything.
okay,
I
okay,
really don't remember it.
okay.
Right. All right. If that's it, man, if no one has anything else, I would say, continue trading, continue reading and educating ourselves, and let's do well when Tuesday comes up.
Okay. All right. Enjoy the rest of your night and your
Good
Good
night,
night,
everybody.
everyone. Thank you so
Good night,
much.
everyone.
night.
Thank you, everyone.
good night.
Yes.
Good night.
Thank you.
Speak throughout the week.
Yeah,
Good
man.
night.
Good night.
Good night.